Hello, everyone. I am Kim Hughes, and this is the January 5th edition of Sane Crypto Live. Whoops, would help a lot if I remember my microphone. So, if you are a replay listener, do this. Take a second and tell me just a little bit about you in the comments below, if you would. Let me know where you're from, and I'd also love to know what your interest in cryptocurrency is. Is it just as an investor? You're in it purely for the profit? Is it more that you started out having some interest in the technology and or the social implications of the technology, or is it both? And if you want to, also how long have you been in it or looking at it? Okay. So today's topic is a little bit of a rant. My mother was here over the holidays, and I suggested that she should have a little bit of exposure to Bitcoin in her IRA. And, why they still pay a full service brokerage firm when I have spent my entire career teaching people how Wall Street advice makes them rich and not you is totally beyond me, but okay. So, because they do, it's a small little firm where they used to live in Durango, Colorado. So I, at least a small office. So I warned her that this woman who handles her account would probably tell her that it was a bad idea. And oh no, she won't. She says she just does what I say. Okay. So yesterday she texts me and says, I should show it to you. She says, decided not to do Bitcoin after all, or after talking to Lori, it's the broker woman. My Cheniere stock is up $10 in a month, and they expect energy stocks to keep rising, so I'm going to hang in there. So let me tell you everything that is wrong with that text, which, by the way, I just shook my head and texted her back and said, whatever you want to do, mother, right? Maybe it's a blessing. Because I don't, have to coach her through the volatility. But, just for context, okay? It's not like I'm some 20-year-old kid who just got into Bitcoin and got all excited about it and is telling their parents that they should invest, okay? I invented an investment method. My investment firm, which I sold last year, when I was managing it, which I've been out of it since like 2009, but like we were managing and consulting on over $500 million in assets, right? And we were successful in bull markets and bear. I'd like to see the track record of this Lori, but whatever. So anyway, here is what is wrong with that statement. First, let's just address the obvious. I could show you a chart of Cheniere. Well, okay, Cheniere is up $10 this month. Okay, on a $55 stock, that's 20% in a month. That's actually pretty good, but it's been flat for a year, and Bitcoin is up 300% for the year. Now, there's no guarantee that it will be up at all this year. Could go to zero tomorrow. But the point being, these are outsized returns right now. And the opportunity to make those, the rule of 72, which if you take the rate of return so the standard rate of return over time of the stock market is about 8%. Okay, call it, the last couple of years 10, just to make the math easy. So the rule of 72 tells you take the rate of return, 72 divided by the rate of return, it tells you how long it takes your money to double. So at 10% a year, which is above average returns that we've been getting here lately, it'll take 7 years for your money to double. Obviously an investment in Bitcoin this year, no past performance, no guarantee of future results, but you tripled your money in a year. Okay, those are the reasons why I believe you need exposure, not go hog wild, put your whole portfolio in, and nor was that what we were talking about for my mother, but exposure. Okay, second, The stock she owns is a natural gas stock, okay? You can't know this, but the woman should. Their entire income is tied to natural gas royalties. That's what they live on. She shouldn't have any of her portfolio in energy. The entire thing is 100% correlated. Like it's the equivalent of being all in real estate in 2007. Okay. So that's crazy. And again, the reason that, I like the cryptocurrencies for the moment is because they are totally uncorrelated with any of the other paper assets that you or real estate, or not just paper, commodities, any of the other asset classes that you would be investing in. The third thing is they think that energy stocks are going to go up. Okay, here is a mental tip for you. Any time that you hear yourself say, especially with regard to what you think is going to happen in the market, right? When you hear yourself say, I think, that, or someone else saying, I think, that should be a huge red flag. The market doesn't care what you think, and no one has any idea what's going to happen next. They are guessing, and they are just as likely to be wrong as right. No one is able to make money over the long run picking individual stocks. It's been proven over and over again over hundreds of years of the markets. Okay, as an example, just timely headline, Warren Buffett just won a 10-year bet with a hedge fund manager, that any basket of 5 hedge funds the manager picked, including his own, which he manages, right, couldn't beat an S&P 500 index fund. If you don't know what that is, it means it's a fund that you buy that owns all 500 stocks in the S&P 500 and just mimics the returns of the market. Okay. And it wasn't even close. An investment at the end of 10 years in the hedge funds was worth like 200,000 and change. The S&P 500 index fund was 800,000 and some odd. Okay. And hedge fund managers are supposedly the smartest money managers in the world. They can't do it. This Lori thinks she can, or you think you can? Which, by the way, this applies to picking altcoins as well. But that's topic for another day. And then the other thing, which of course irritates me, is that my mother would listen to some stupid woman instead of me. You know how, like, even though you're 54 years old, your parents still think that you're 12. But that isn't really the point for you, is it, right? The point for you is this. Your job as family CFO is to maximize the risk-adjusted return on your portfolio. It is to be able to create enough cash flow that you can, particularly in retirement, do what you want when you want without having to worry about how you're going to pay for it. The investment method that I created back in the day, right? It was really unconventional 20 years ago because we used laddered options to create portfolio income with about the same risk as bonds, but with, a much higher cash flow rate. And at the time, I used to have to fight and fight and fight when my students or clients would tell whoever, right, that had their account at the time, that we were going to use options, or their wife, right? I mean, oh my God, who is this charlatan telling you to put options in your retirement account? You're going to lose all your money. Ha ha, jokes on them, because we were managing risk with options rather than taking risk. We were able to manage very successfully through bull markets and bear. And in fact, back then, it was just not the way people thought. It was so non-mainstream that there was only one brokerage firm that even allowed options in your retirement account. Okay, now they all do. It's no big deal. Nobody even thinks about it. Options in your IRA, whatever, right? Well, Bitcoin is the same thing. Okay, so here is the real crux of the issue. Should my mother, who is 75 years old, or you, have exposure to Bitcoin? And I believe the answer is yes. Not your whole portfolio, exposure. And again, why? I've already said, because it's uncorrelated with any other asset class. And at the moment, there is an opportunity to make outsized returns with a very favorable upside downside skew. Now, will many of your friends, your neighbors, your broker tell you that you are crazy? Yes. Okay. But this always happens. Just like the options, someday this will be totally commonplace. And the opportunity for these outsized returns will go away as more and more people go in. If you look at my Sane Crypto roadmap at sanecrypto.com, you'll see sanecrypto.com/roadmap. You'll see that my worldview is that this is an investable bubble. And with that worldview, I believe that every day that passes is one day closer to that bubble bursting. And so every day that passes is a lost opportunity. Okay? So if you fit the criteria for investing, meaning you've thought it through, it makes sense as part of your overall plan, you're not risking capital that you can't afford to lose, then put your fingers in your ear and go, la, 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 la. I'm not listening when your Wall Street broker, who probably has no idea what they're talking about, tells you not to invest in Bitcoin. Okay? Because assuming all those things that I said earlier are true, you aren't putting money in that you can't afford to lose. That advice is wrong and potentially going to keep you from participating in a once-in-a-generation opportunity to participate in such a lopsided risk-reward skew. Okay? Helpful? Make sense? If you have questions about that, I'd love it if you would put those in the question box, in the comment box below. I will always circle back and answer those to the best of my ability. Love questions, favorite topic. Also, if this was helpful, I do this every weekday morning East Coast time here in the United States. So if you'd like to be notified when I'm going live and what the topic is, you can go to sanecrypto.com/live, and our messenger bot will get you signed up for those notifications. Also, if you would like to learn more about my system for investing in a sane way in cryptocurrencies, then you can learn more about that at sanecrypto.com or sanecrypto.com/webinar. Of course, I have to tell you, disclaimer, that everything that I said here is for educational purposes only, should not be construed as investment advice. Past performance is no guarantee of future results. All investments involve risks, especially this one. Could go to zero tomorrow, so do not under any circumstances put money in this market that you cannot afford to lose. I want to say thank you so much for listening, and I will be back Monday with another installment of Sane Crypto Live. Until then, remember, you guys, the market is not the enemy. Fear and greed are your biggest enemy. And the way to control fear and greed is a sane system repeated over and over again as if your life depended on it, because your financial life does. I'm Kim Snyder. Now, go forth and conquer.